Either the team leader who you're interning for or the internet will tell you where and how.
In the United States of America, the value of residence has increased 8% since the year 2018. In a survey of real estate professionals and economists, half are predicting a 15% recession in 2021, while the stock market has had a typical annual rate of return of 11% from years 1970 to 2016. But the question here is that, can you make more money by investing in real estate or by investing into stocks? Well, let's find out. Welcome everyone to a new interesting video on our YouTube channel. In this video, we will discover about the new investing era and we'll see which investment can lend investors more profit, investing in real estate or investing in stocks. What is real estate? Real estate is something that you can physically sense and feel. It's an actual present property and thus, for many investors, is a realistic choice. For many decades, this form of investment has produced compatible income and received long-term consideration for millions of people. Depending on the location of owned real estate property, someone can acknowledge great returns on their investment. Real estate refers to equity like houses and buildings, including the natural reserves and associated elements such as water and minerals. Real estate, moreover, includes residential, industrial, and commercial real estate. What are stocks? With a stock, you own holdings in a company. Stock ownership indicates that the shareholder owns a piece of the company equal to the number of shares held by him as a proportion of the company's total number of shares. When the performance of a company is good, investors receive profit. During moments of financial challenges, prices of stocks go down as the funds and earnings of the company drop during the period of time. Taking a long-term approach and being stabilized in many areas can help build your net worth at a largely bigger rate. The fact is that investing in the stock market carries risk, but when practiced in a disciplined way, it is one of the most fruitful ways to build up someone's net worth. Most of the prosperous and rich people mostly have the bulk of their wealth invested in stocks. There are several aspects that make a difference between investments in real estate and investment in stock. Both have their own advantages and disadvantages, but before doing investment, one should always know about the positive and negative qualities of the subject before making money from it. Real estate investments and stock investments. Real estate investments are investments in a property or tangible and entire assets which are frequently used for the long term. It is a very lengthy process. Stock investment means investing money in a company by buying its share of stock from the share market and gaining profit by selling the shares at a reasonable price, which is a simple, short, and liquid method. When an investor invests in real estate, it enables him to purchase physical land or property. Real estate can be seen costly every month if the profit is left unoccupied and stays unused. You have to pay taxes, maintenance costs, utilities, insurance, and more. There are some real estate properties which charge every month for its holding process, such as an empty area of land for which investors are often seen paying taxes and spending their amount for the maintenance before finding a buyer. Stock refers to a small ownership in the company, which represents a claim on the assets and revenue of the company. Cash flow from stocks is not such a type of cash flow which would come from renting out an estate you own. Most of the money from stocks comes in the long term when you sell. However, investors receive capital while occupying stock through dividends which can be used to reinvest in stocks. Companies are frequently seen sending some amount of cash to their shareholders for holding its stock to buy more shares. It allows investors to purchase new shares and hold them for more earnings. Major differences? Number 1. Stocks can be bought and sold quite easily, but real estate, comparatively, requires a long time since numerous factors are included such as legal obstacles, appropriate rate, etc. Number 2. A stock depicts a share in the earnings of a company where the real estate is a commodity over a portion of land that has been bought for either personal use or further financial profits. Number 3. A stock is mostly a short-term investment depending on the portfolio necessity. However, real estate is a long-term goal and its value can increase with the coming time. Number 4. Stock does not cost much money and relies on the investment goal of the buyer. The prices of stocks are unstable, and the fundamentals and economic accomplishment of a company also have an explicit effect on the price of the stock. Real estate is generally a one-time investment and depends on different aspects, such as the investment capacity of the buyer, the size of the real possession, and more importantly, its location. Number 5. Stocks generate earnings depending on the financial performance of the company, which may or may not be consistent. In contrast to that, real estate does not generate income in such a way, but if the real estate is given on lease, it generates a satisfactory amount of rent on a serial basis. Number 6. Bank loan facility is normally not functional for the stock market, but the investment in a real estate property almost requires the support of a bank loan. Number 7. Stocks can be acquired back by the company on the basis of its requirement. However, after selling the real estate property, the owner cannot get the property back again. Number 8. The cost of a stock changes at every millisecond, and every single piece of amount makes a difference since these can be bought in bulk. However, rates of real estate properties change on an incremental basis and are promptly impacted by various factors. The differences in the price of real estate defines the condition of the specific country's economy. If prices are increasing on a gradual basis, it is a proof of the country's progressive economic condition. Number 9. A stockholder is the owner of his or her property, but cannot control the activity of stocks as per his choices. However, owners of real estate are accountable for all decisions which have a direct effect on the existence of the property. Number 10. Price of stock changes on a day-to-day basis. On the other hand, price of real estate fluctuates with months and years. Many investors have traditionally shifted to the stock market as a platform to increase their wealth, as stocks are a well-known property alternative. Both real estate and stocks can give long-term monetary profits, and both come with risks. While choosing the right investment policy, the best way to reduce the risk and take more advantages is to diversify the investment plans. Investors can adjust much easier with stocks than with real estate. They can buy stocks in several companies so that if one takes a loss, another one can help in covering the losses. Investing in real estate decreases the risk of loss if the property owned by the owner is held for a long time. Value of your properties improve with the changing market scenario, which leads to equity. There are various factors in the stock market that can affect your investments. Real estate gives you more control on your investment because the property owned is a tangible asset. If you don't have unlimited budgets to invest in real estate, you will perhaps have only a few properties. This makes it difficult to adjust, but even with real estate, someone can diversify by carefully selecting the right locations and types of properties to buy. Many people are not aware that real estate investment is considered to be the safest investment. There is no doubt that the real estate sector is one of the fast-growing sectors in many countries. The real estate investments are reckoned to be the second largest reference of business in many countries like India. Real estate has many advantages over investing in stocks. Real estate gives a predictable cash flow. It respects the value of property, thus carrying with inflation. It also provides a greater return because of favorable leverage, along with offering equity growth through debt deduction. Cash generated from renting real estate properties can provide constant and valid cash flow on a month-to-month basis. Many real estate investments are cash generating, like a flat building, rental houses and warehouses, or a mall where you pay payments. Inhabitants pay rent, and some owning it keeps the difference as profit. Many people have become millionaires by investing in real estate more than possibly any other investment option. With the growing population, the demand for land is increasing incredibly, which means that investing in real estate will give great returns in the long run. Share your opinions in the comments section. Which investment would you find better, investing in stocks or real estate? That's it from today's video. Subscribe to our YouTube channel for more interesting videos. Press the bell icon for more recent updates. Thanks for watching.